Welcome, everyone. Thank you for attending another session of RM Smart Investing. Today's class, we're going to focus back on technical analysis and using a couple of indicators that actually the first one, relative strength index, is a very popular indicator as an oscillator. And the true strength index is actually a derivative of RSI, but it's very much underused. So I thought it would be a good idea to introduce you to it if you haven't used it. And it's much smoother in some ways, easier to understand. So let's get more familiar with it, and hopefully it will be profitable and helpful indicators for you. Before we dive into these, I borrowed the next 3 or 4 slides from our modern technical indicators class that we've had. And just a refresher to just let you know, there are different kinds of indicators. So we want to differentiate them. And the first one will be a lagging indicator versus leading indicator. And the lagging is already, it's in the past, we've already seen it. We can use it as a guidepost, but they are lagging. So such as moving averages, they look at the past 200 or 50 price levels, Keltner channels, Bollinger Bands, standard deviation. They look at back and they average things out, and they look at mostly on the moving averages. There are leading indicators such as stochastics, MACD, RSI, parabolic SAR, Fibonacci's, Ichimoku's, unbalanced volume. These are more either coincidental or forward-looking, and these are mostly their oscillators, and they drive from the price itself, in a sense that they usually are not part of the actual, usually when we do the charts, they are on the bottom or top of the chart, so they're not in the chart. So those are more of a leading indicators. Then the second part I want to introduce you is like the momentum indicators, that it actually allows us to be in the right place. If there's something has already started with inertia, we want to be with it. So momentum indicators are stochastics, MACDs, price oscillators, RSI, and unbalanced volume, as well as actual momentum indicator, which there is a momentum indicator by itself. The third thing is strength indicator. We want to see how strong these momentums are. And the first one is RSI, which is relative strength index. We have the average directional index, ADX. And then we have the CCI, which is commodity channel index. And these also help us to be not only on the right side, but go with the right, with the strength of the movement. The last but not least, the oscillators that we use, they could be in 2 categories. Some of them are called bounded, and usually what it is from 0 to 100. And basically what we use when it's a bounded one, we have oversold, overbought, we have the center line, and that allows us to see if something is really stretched or not. But they do have their boundaries, and again, they are between 0 and 100. So and sometimes it could be minus 100 to 100, but it's usually 0 to 100. And basically the ones that are RSI, stochastics, CCI, Williams percentage R. Then you have some that are unbounded. So there is no boundary. We don't have, they can continue and go on and on. So one of the examples that we will use is the TSI. So you can see we have RSI, which is bounded, and then you have TSI, which is unbounded. MACD, if we recall, we could use a histogram, but MACD could go up and with no limitations. And of course, we have 0 line to give us the guidance, but That's something that is called unbounded. ADX is the same thing, DMI, whether positive or negative, and rate of change, or ROC. So these are unbounded. So I just wanted to refresh your memories based on, again, the technical indicators so you can differentiate them. And with that in mind, let's talk about first the relative strength index, which developed by Wells Wilder. And he's been the father of quite few indicators, but the RSI is really the most used indicator. And it is a momentum oscillator, as I mentioned. So what it does, it measures the speed and the change of the price movement. So it is price dependent. Now, RSI oscillators, they oscillate between 0 and 100. And that's why, as we mentioned, it is bounded. And what Wilder said, and I would recommend with our all continuing charts and the slides that use, if you want to do something, I would recommend most of the time follow the founders or the originator of these indicators. For instance, for Wilder, he uses 70 and 30 as his guidelines. Sometimes, we can, some markets have their own numbers. So let's say with Bollinger Bands or with Keltner channels or the stochastics, you can work with the numbers and change them. But majority of time, it's just good to stay with the numbers that, again, this situation, Wells Wilder had decided to use, which you shall see the numbers that he used for RSI, which is a 14-day. And that above 70 for him was overbought, below 30 was oversold. And basically what we could use, not only by looking at overbought, oversold, we can look at the divergences, the failure swings, the center line crossovers, and also we can use the trend lines. So it is important, again, to be visually familiar with RSI. So it's not just about overbought, oversold. It has a lot of other applications. And simply what it is, RSI, it says relative strength, is previously, a couple of weeks ago, we talked about just the pair strength or relative strengths. And usually we compare two investment vehicles with each other. So basically, we want to see how they compare. We also talked about majority of time we compare it to Standard Poor, like SPX. We see how is the strength of this underlying asset compared to S&P 500, and whether we want to be in a strong market, so we want to be something which has a better relative strength than the market themselves. With RSI, is the relative strength is against itself or comparing to itself. In this situation, all we do, and that's again based on Wells Wilder, is he looks at the past 14 bars, 14 days, 14 weeks, and then we look at what has been average gains during that time and what has been the average losses, and we just smooth it out. So if you had more average gains, then obviously the trend will be up. If the average losses took over average gains, and every 14 days, it's a rolling 14 days, you just drop the last price, the first price, add the last price, you continue that, then obviously the trend will be down. So that's simply what RSI is. And that's a big advantage, and the simplicity of the idea. So how do we use these RSIs? So these are some of my criteria, which later I will, just bear with me, we will look at the charts so you can, hopefully it will be easier to understand. Number one thing is, Alder found out that when the stocks are over 70, that means they're overbought. That doesn't mean you have to short it or sell it. It just means just be aware that it is, it's strong, but just be careful, it could be overstretched. Oversold means under 30. And that was, again, the guideline that if it goes under 30, that is oversold. But if it comes back over 30, that means now the move can be reversed. And maybe that could initiate a new position. Divergence. This is my favorite. divergence, what it means is the indicator in situation RSI does not confirm what is happening. Not only doesn't confirm what the price is doing, actually it's going opposite. So if the price is going up, an oscillator, in this case RSI, is going down, it's a cautious light, a caution light. The trend lines, like once we do in like a classic technical analysis with the prices, you could also have trend lines with RSI itself. Then we have that 50 center line. Again, we mentioned that RSI is from 0 to 100, with 50 being right in the middle, the center line. That could be telling us that maybe the trend, if it goes back up, it is changing. Now, by itself doesn't mean anything, and we will see that, you know, the center line, that means there was no movement. So, but it becomes an important, like the next line, as you can see, when the stocks are in the bullish trend, and you can see there's a strength, generally they range between 40 and 90. That shows the strength. And as I mentioned with the trend line, what happens is when they have a support at 40, 50 line. So you can see if it comes back to 40, if it bounces back, that means there's still strength in this trend. On the other hand, if you have a bearish trend, the stocks or whatever investment vehicle you're using, if they're in a bearish trend, usually they range between 10 and 60, with the resistance really around 50, 60. So if they go, you know, they're down and they bounce back and they go to 50 or 60 and then they get rejected, that means that the downtrend is going to continue. The last one, I put the direction. And what that means is, again, if you had a reversal, for instance, that the momentum is going up, let's say we pass that midline, it gives you, telling you that the trend, for instance, if it's going up, the trend is up. And then it also, depending on where you are, how much of a strength it has. So that's the uses of RSI. I mentioned about divergence, so I want to inject this as far as a little cheat sheet for you. How that means, you know, when we have, let's say the price goes down, the oscillator, in this case indicator, is actually have a higher low, as you can see, while the price has lower low. That's divergence, and actually this is bullish. Or if the price in this situation is actually going up, and in a situation, let me just go back here, the bearish, when the price is the price is actually going up and the oscillator is going down, then this is bearish because this is not confirming the price movement. The momentum has slowed down. So those were actually, that's a sell signal that you actually can see they're regular, but there are some hidden ones. The hidden ones are that while the indicator was actually going down, and there's a contrast, but the price actually started having a higher high. These are called hidden. And basically, again, there's a divergence. And in this divergence, this price is divergent from the oscillator. And because we're having the higher high with the lower low oscillator, that's could be, again, it is not 100%, but that tells us there could be a change of or the confirmation that maybe the price is ready to go higher. The opposite is also true. If the price is making lower highs and oscillator is making higher highs, then that means that you know, this could be a sell signal. So this was just a little cheat sheet. Just again, it's all about the confirmations. We want to make sure they both are agreeing with the signals. So the price is king in the sense that. Now, we have a derivative of the RSI, and that's called true strength index. And what it is actually it's a double derivative in a sense, double smoothing price. And it as you will see, it's cleaner actually even than RSI. And it was created, you know, developed by William Blau and it came in the, one of my favorite magazines for the technical analysis is Stocks and Commodities magazine. And what it was, it basically takes that momentum oscillator and then looks at the time period and then smooths it over 25 bars, and then uses that 25 bars and smooths it even more. And again, it's like a second derivative at the 13. So it has a 13 bar, and that becomes your TSI line. Then you will have a signal line, which is like a 7 or 8, a moving average or exponential moving average of all those, and that becomes your signal line, which is very similar. Let's say in MACD, we have seen it, in stochastic, we had seen it. So basically for that, again, for TSI, we can use overbought, oversold, center line crossing. And this one, TSI, unlike RSI, has no boundary. So it is similar, let's say, to like MACD, for instance. So again, how do we calculate it? As I mentioned, we look at the price range, and then we take a 25 period exponential moving average of that. And then we take a 13 period exponent moving average of this 25 period, and they're rolling. So, and then we have it called double smoothing, and then we have a signal line. So how do we use the TSI? We have a center line crossover, which is like 0, like MACD, we have that. So when it crosses, if it's under the 0 line, that means that it's negative. There's a bearish movement. If it's above the 0 line, that means there's positiveness. Again, very similar to MACD, the trend is up. Then you have the overbought, oversold. Although we don't have boundaries, you can see if it's really stretched out compared to the past. You can look at the 12 months prior, and you see it's like really higher, much higher than that 0 line. And when you see this again, kind of overstretched, which I use, like for instance, if you recall, we use it on 20-day moving average when it's like really has, let's say, price moves away from the 20 bar moving average too far away, or the 20 bar moving average is way above or below the 200-day moving average or 200 bar moving average. Usually it's the return to mean. So this is the same thing here with the overbought, oversold interpretation. Then we can also do trend lines. Like again, like the prices, we can have support and resistance based on this indicator. So you can actually draw lines. My favorite thing, again, like RSI, I love the divergence. So higher high, lower low, then that's what I look for to see if the price is going higher, but the indicator is going lower, then that's negative. If the price is going lower, but the indicator is going higher, that's, again, that's a divergence. The last but least is, again, remember, we've had the signal line, could be the 7 or 8 bar smoothing line, which is based on the TSI. Again, like MACD, or even stochastics, when they cross, that could be either buying or selling signal. So let's look at a chart. So I want to look at the SPX. This is right after the close today. I can see February 16, 2022. And I want to look at the weekly. Interesting thing, just by looking at it. So this gives you, this is interesting to see that this is our 50-week moving average. And you see 3 weeks ago, this is a 4 weeks, come to this week, we did have the sell-off, but where did we close? We closed right above that 50, and this week we went touch that 50-week moving average and sitting right on it. So that's a critical point. You want to watch that. Now we have MACD. We've talked about that with the signal line, and this is RSI. So RSI, you can see if we go from absolute point of view, we don't sell it just because, let's say, it's at 75 or 80. We will watch it till it crosses. And as you could see, once it crossed, that was a signal that it's time perhaps to lighten up. Now, if you didn't do that, you can see the price came down but continued. We talked about divergence. You can see we have a lower high in RSI and higher high in the price. And that tells us that that move is tired. So now we are right at the center line, and that doesn't give us any indication. That tells us there hasn't been any really movement on a weekly basis. When you think about that, we are at 48.64. We're a little negative, but we've been having a support. So we talked about the swing. So we could have something like this and then bounces back. That's like we didn't break down. So that's like a swing, that's a bounce. So that confirms that move is, the trend is up. Let's look at the TSI. On the other hand, what you can see again, the two line is what we got is right here. We were very much, you can see we were at -20. So it was very much away from the midline, which is the 0. But that's just a warning. Here we crossed it. So that could be one indication of confirmation. Perhaps at this moment, you could go positive. Now, if you want to be ahead and you really be aggressive, you can see how the MACD was so, the histograms are very long, and then now they're getting shorter, and we have such a big gap between the signal line and the TSI. You could have actually gone over here, but that's on the hindsight. And you can see the same thing with the RSI. So perhaps once the RSI crossed the 30 and the MACD bars are getting shorter, we could have done that. But to have a real confirmation, complete confirmation, you can see once we crossed the 0 line in the MACD, we have crossed the 200 bar moving, in this case 200 week moving average, and the signal line has crossed the TSI line. That's right around here is a true confirmation, and you would have stayed with it for quite some time. We had a little false breakouts, the same here, till maybe around here you're getting a little away from the center line. The same thing on TSI. So you can see maybe around here there was a little caution, but when we come back here, this is, I will go a little more into that, but you see we have higher high in the price. And what happened to TSI? TSI has the lower high. So right around in like November, we were actually getting a divergence in our TSI. So right now, if you ask me where we stand, we are pretty much neutral, and we are above the 0. So when you're above the 0, there's still the bias to the up, or the bullish bias, but there is no confirmation. We haven't crossed this line. We're just still above the 0. So this is on a weekly basis. I also want to look at on a daily basis where we stand. And again, it's been pretty choppy. You can see how we've been going back and forth with the MACD and the TSI, and we are right hugging that 200 bar moving average. This is Hakinashi. Basically, we've had the red bars. We are just have a we see it's almost indecision here, and this is not really confirmation. So and as you can see, the RSI is at 44. It was trending down, now it's trending up a little bit. So these are the things you want to watch. So you can see that there is no confirmation. There is the negativity is out of the market, but we are not positive yet. So it's still neutral. And you see we have the higher high, but also in price we have higher high. So they just confirm that we are okay. So let me just in summary, let's talk about what are my 7 criteria for RSI and TSI. Number 1, it is better for longer time frames, in my opinion. So even though it's slow, and you can see on a weekly and daily, they are pretty strong indicators. So of course, I like stochastics. We talk about embeddedness. We like to look at MACD for trends. RSI could help us, again, especially if you haven't used TSI. TSI could be a good indicator. especially on indexes, but they are better for, again, on a daily basis rather than, let's say, 15 minutes or 5 minutes or 30 minutes. They become a lot of noise and choppiness. So I would recommend to use it at least on a daily basis. The lowest I would go maybe 60 minutes, but I like the daily. TSI is smoother than RSI, so it's easy on eyes. So, but I would recommend the longer term. Now, the other thing you have to remember, just because something is up at over 70, that doesn't mean it's time to either short it or sell it. Because stocks or any investments, they can stay overbought or oversold for a long time. If you were around in 1990s, for instance, you go back from 1996 to go all the way to end of 1999, 2000, a lot of times the RSI was overbought in many stocks. So it was just eventually obviously corrected itself. But if you're in 1997 and RSI is at 80, you could have missed a big run on NASDAQ, for instance. So just be aware of that. The third thing is I really like the divergences. They're great leading indicators. So I like to use them a lot. And the other thing is these are not standalone, so make sure you combine it with other indicators. For instance, I mentioned Keltner channels. Keltner channels are which average true range around the moving average. The average true range can give you a nice, basically boundaries. But if you have the RSI, it tells you the strength of that and how far, let's say, if we broke the mid-range, can we go higher? And RSI would be a good combination with that. I think the TSI is also very smooth, and it's good to see the tops and bottoms. Visually, you can see when there's a turn in TSI, it's a good time to see that probably price has been overstretched. RSI is not a useful when the trend is really strong. And what I mean by that is, RSI can be, as I mentioned, overbought, and sometimes it gives you the wrong message. So just watch other indicators. For instance, we can look at ADX to confirm the strength of the trend. So be aware of that. The 7 RSI of 50 means there was no price change in 14 bars. So really it has no direction. So just be careful with that. So with 50, usually, as I said, it could be a nice indicator in the sense of it being a support, or if it drop to that area and if it bounces back, that means the strength is still there. Or if we cross from let's say we are oversold and now we pass 30 and 40, and now if the direction is passing 50, that helps you to consider the strength of this and saying that, oh, now looks like, it's a confirmation that we could be an uptrend. So this is once you want to do, and this is from Thinkorswim, if you want to add it, how does this indicator is basically the parameters with this indicator, you can see is the 70 and 30 are the overbought, and all we do is just look at the 14 bar length. It is based on close, and the average type is called Wilder's. So basically, Wilder's breakout. This is for RSI. Now, I just want to compare that to True Strength Index. So you see there's a 25, 13, 8 is our signal line. Now, these are the things you could use for the relative, actually from the strength index. As you can see, there's Wilder's, but we use exponential for the TSI, which shows the strength of the most recent price. So that's the choices you have, but for the TSI, we use exponential. So that's how you can add it as an indicator for your chart. Now, I wanted to use a couple of examples for you. This is from the SPX from today. We are at 44.57. It's a daily 1 year, you can see we have the squeeze, we have the LRC, and linear regression channel. Now you can see the prices were going up, and these are Heikin-Ashi candles. And in the meantime, the RSI was coming down. And you could see that even at the January 3rd, what happened, we hit the all-time high. So right there, you see that January 3rd is all-time high, while we have much lower high on the relative strength on RSI. So you have this heads up, and then we look at the Heikin-Ashi, then you got this red candle. You're also looking at the, basically when we look at the squeeze, the momentum actually slowed down. You see the color changed, and this was telling you the momentum has changed. And then once we crossed, that was just telling you, and we went to the squeeze on top of that. So it was telling you it's time to get out. So just a food for thought. On the other hand, now we've hit the other side, another side. We remember we got the second standard deviation LRC. The momentum is colors changing. We were very oversold. Once we crossed the 30, now the things look in line. At least now we see how strong it went. Now we are back to that 43, 44 area on this one. And basically, again, it's like a no man's zone. We're still under 50. So because we are under 50, it's still negative. So we are not out of woods as far as the buy goes. Looking at the similar thing again. Oh, I'm sorry. You know what this was? This is MACD. My apologies. This is our MACD, not the squeeze. So the MACD, because we use with Heikin-Ashi. So let me correct myself. This is the squeeze. So the squeeze, we go back. This is our TSI. You can see again, divergence, January 3rd, all-time high. In a squeeze, we've had the bars had been changing colors. Right, again, similar to MACD again. So we're very much similar. And then finally, we just broke and went to the red momentum line. Now, TSI is still below 0, as you can see. Although, trend is up, we're still not in a positive trend. Now we are going to the squeeze. We are below the 20-bar moving average and or 21-day moving average. So we still not, we are going to the squeeze, and I would pay attention to that. The other thing I want to share with you, I mentioned about trend lines. So this is what you could do. So you can actually draw like resistance. Here is a trend line going back to September, right? So we had the sell-off in September all the way to October. Now, what you could do, we could do it, a trend line from this high. You could do trend line, touch this, basically a trend line. And then once we broke that, and now here we broke the 0, you see it coincide with many things. We had a 1-bar squeeze. The momentum had changed. We broke above the 20, and also the TSI has broken its trend line, and we broke above 0. So that gives you confidence that, all right, all the indicators are in harmony. So this is a good time to actually confirm the buy signal. I also have, I thought maybe a couple of scans I want to share with you. Basically, these are, it's very simple. They are under the study. They are actually predefined, so they are there. All you have to just go RSI scan. Sorry, that 14, you can say greater than 70. Greater than 70 means there's a strength. So just watch for the warning sign if there is any overbought and changing the trend. So these are some of the candidates, and you see there's quite a few. There's like, for instance, we have it in gold, which is a Barrick gold. There was obviously, it was a good day for the mining stocks. We have it in Brazil. We have talked about, I talked to a couple of you about the AbbVie to watch it. So today was a very good day for it. Also, Saturday we'll talk about SABR, for instance, was part of our unusual option activity end of January, and they came with their earnings. So they've had a very nice 2 days after the earnings. So they are up here. So there's quite a few of these that we had talked before. So, and then I have added the sizzle index. I want to see how strong the option markets are related to this. So anyway, that's one. And then the other one I did was like for oversold. Oversold doesn't mean it's time to really for turnaround, just be aware of it. There could be more weakness coming, but just be aware, like for instance, IWM, I'm sorry, 3M is 3M is at 25.79 and has a sizzle index of 175. So we want to watch these to see if there's any turnaround, or if they're like weaker ones that they're going to continue, then maybe they're spread or put options candidates. So with that in mind, I hope that was helpful. I appreciate your attendance and your attention. So if there's any questions, please let me know, and I can answer that. So Sean, we can stop the recording and